Hi, everyone. Welcome to another episode of the Thriving Immigrant podcast. And I'm so excited. I'm grateful to God for the opportunity to host you again today. And I've got an amazing guest on the show. Today's conversation is a conversation that even me, I've been longing for this kind of conversation. And I am really happy to introduce you to my guest. His name is Mohammed. He's been doing an amazing work educating people about taxes and finances on Twitter. So today, he has agreed to come on the Thriving Immigrant podcast. Mohammed is a certified public accountant. And like I mentioned, he's been doing a great work educating the community. If you are in Canada, you will agree with me that taxes, they are serious discussions that everybody should have because it's your money and you want to understand where your money is going to. So join me in welcoming Mohammed from Tax Heroes to the Thriving Immigrant podcast.
Thanks. I appreciate you having me. It's a pleasure to be here.
All right. Okay, so let's get straight into it. First of all, I would like to know if you are an immigrant and if you can share a little bit about your immigration journey and maybe how you became an accountant.
Perfect. As you know, my name is Mohammed. I'm one of the partners at Tax Heroes. We're a fully virtual accounting and tax firm. We do everything from accounting to for businesses to tax compliance to tax planning. I actually came to Canada when I was 2 years old with my parents. We were five kids in total. So I have four older siblings. Actually, sorry, three older siblings, and I have a twin sister also. And when I came here, I was really young too. So because of that, I don't think I would necessarily say I resonate with the immigrant experience, but I got to witness it firsthand from my siblings and from my parents, and I saw the challenges they went through, and I saw kind of the disconnect that you can have, or even sometimes language barrier you could have with your parents, or what parents might have with their kids. So it was really interesting to see, although I am really an immigrant, because I was kind of raised my entire life in Canada. I don't necessarily think I resonate with that immigrant experience, but I did get to witness it. So I have a very unique experience. I went to school here and then I went to university and became an accountant because I just kind of wanted to, well, two reasons. I kind of Googled, high salaries, and one of the salaries that were kind of relatively high were accountants, but it was actually just a complete lie. The salaries weren't that great. And I also kind of got interested in finances and taxes and how to kind of save people money and all that kind of genre of uh, of finances, right? And it really resonated with me. And so even though I went in and I wasn't really making that much money, it really interested me, and that interest kept me staying in and eventually starting my own firm.
Okay, thank you so much for sharing that with me. You are a unique immigrant. So, well, thanks to dad and mom that moved to Canada when you were young. And I appreciate your perspective mentioning about the fact that you understand that you are not like the average immigrant, but you've seen some of the challenges that immigrants go through. And you also mentioned that you want to save people money. That's one of your passion, and that's why you decided to study accounting. So let's talk about taxes. It's a discussion that everybody wants to talk about. For for me, my first question would be, why should we file our taxes? So are there any are there any penalties for not filing your taxes, or why should you file your taxes?
So there are penalties and even potentially criminal offenses, jail time that you could serve if you don't file or pay your taxes, right? So there are some pretty severe consequences. And this is kind of a big misconception I find a lot of immigrants have. So myself, my family being from Egypt, taxes weren't really a thing in Egypt. And so when my family came here and when I saw, family friends come here, it was kind of a foreign concept. They're like, what is this thing that we're paying 30, 40, 50% taxes to? Like 30, 40, 50% of our income to. And, I don't know what it is and what is it being used for? And so it's kind of a hard concept for a lot of immigrants to kind of understand. And so many of them don't actually end up filing their taxes, paying their taxes, and they don't really see a lot of the they don't really understand a lot of the implications for doing that. So in general, some of the more basic implications for not filing is you could be charged interest and you could be charged penalties, right? Interest right now with the CRA is 10% compounded daily. Penalties can range anywhere from like, zero to $25 a day to 50% of the tax you owe to 5% of the assets you own, right? Depending on what you're not filing and how much how much negligence or misrepresentation is involved. So those are just the financial penalties, and then you also have criminal penalties, right? Like in some cases, if you're doing tax evasion, fraud, you could serve time in jail, right? And and people are like, okay, I just won't pay my taxes, and if I owe penalties, I just won't pay that. What are they gonna do? Are they gonna, come raid my house? They're not. They probably won't raid your house, but they could freeze your bank accounts. And in Canada, you really need your bank accounts for everything, and having those frozen will really kind of impact your life. So the the penalties and implications for not filing are pretty severe if you do owe taxes. But in some cases, not filing will actually make you lose out on money. So sometimes people who don't have any income, don't owe any taxes, can actually get certain benefits from from filing their taxes. And so that's why I generally recommend students or lower income individuals, make sure you're filing your taxes, make sure you're including your tuition fees, you're including any income you earned in there, because you actually could get money that you're leaving on the table by not filing.
Beautiful. I really love the last point that you made because, for me, I belong to a community where there are different people with different immigration status. We have international students, we have people on work permit, we have maybe refugees and permanent residents and some citizens. So you talking about you losing money by not filing your taxes, I think that's a strong point, and I appreciate you mentioning that. So talking about these different status or different people with different status in Canada, are there any factors that determine what people pay in taxes?
So there are different factors that impact how much someone pays in taxes, right? But what I like to bring it back down is to the calculation, right? So you have income. It's kind of the basic framework of taxes that I like to like I kind of try to pitch this a lot so that people can just make sense of taxes, right? So what do taxes do? They you pay taxes on your income, right? How do they calculate that? You take your income, you subtract your deductions, you look at any tax credits you have, and then you look at your tax rates, right? So you look, there's four different components to determining how much taxes you have to pay. So regardless of what stage you are, or what kind of category you're in, whether you're an international student, whether you're working, you have a business, you're a refugee, it's all going to go back to that basic calculation of income, expenses, tax rates, and tax credits. So what you're eligible for will depend based on those four things. So if you're a student, you don't have a lot of income, you're not going to pay a lot of taxes, right? Because that's the base of the calculation. But you might be eligible for a bunch of tax credits. And so that's what you need. That's the reason for your filing, to be eligible for those tax credits, to make sure you get that money. Same thing with anyone without a lot of income, right? When you're starting to work, or you have a business, then you can look at kind of the income area and the deductions area to kind of reduce the amount of taxes you're paying.
All right. So thank you for sharing that. But can you shed a little light more on what you mean by tax credits?
Tax credits. Okay, so there's two types of tax credits. Okay, so one of the tax credits is something that helps reduce your taxes that you owe. It's called a non-refundable tax credit, right? So you will only get that tax credit if you have income and if you have taxes. So one popular example is if you go to school and you're paying tuition fees, and for international students, those tuition fees are pretty hefty. You can get a tax credit for the tuition fees that you pay, but you'll only get the benefit of those once you start earning enough income where you're paying taxes. Okay. Then you have non-refundable tax credits. And this means even if you don't owe any taxes, they'll give you a payment. They'll give you this in cash. And some of the ones that are more popular, if you're a part-time student or your income is low, there's a Canada's Workers Benefit, and they will give you actual cash when you file your tax return for this tax credit. It's for low-income people who are not full-time students, and they're adults and everything. So that is a refundable tax credit, meaning they'll actually give it to you even if you don't have enough taxes.
All right, that's a good one. Thank you for sharing. I have a follow-up question. You
Yeah.
mentioned tax credit for international students who pay maybe FT school fees. So how long can that tax credit be valid for? Let's say
So
they don't get to work for the next 2, 3 years. Will they still be able to use that tax credit?
yeah, so that tax credit gets carried forward indefinitely until you have enough taxes paid or income paid, where it can then be used to offset the taxes. So some things will carry forward for a certain period of time. Other things will carry forward indefinitely. Tuition fees will carry forward indefinitely until you pass away. But some things you can do is if you have a parent in the country, you can actually transfer $5,000 of your tuition fees to the parent so that instead of waiting all those years to get the benefit, you actually have your parent claim it. And then if you want, your parent can reimburse you for the amount of the credit that they're getting. So although it can carry forward 5 years and you might not see the benefit for later, if you do have a parent or any kind of other guardian, or if your children are going to school and they're not making use of it, you can have that credit transferred to you, or you can transfer it to your parents to have them get the benefit. And if you can make some sort of arrangement with them to have them reimburse you, then it works out in your favor and you get to materialize on that right away.
Oh, wow. I didn't know tax credits are transferable. Thank you for sharing that.
No worries.
Okay. So for parents with multiple children in university, you might start getting some tax credit back transferred
Yeah,
to.
I will say beware because I had a friend who had tons of siblings, and their parents would take their tax return and get it done, and they didn't realize that the parent was taking all their tuition credits from them, transferring it from all the kids. The parent was paying very little taxes at the end of the year, but the kids weren't aware that $5,000 of their tuition credits were being transferred over. And so when they graduated, when they started to make some money, whereas all their friends were getting such high refunds because all the tuition credits are being used, their refund wasn't as high, so it was a big shock to them. So just be aware. Maybe you aren't, maybe you are, that if your parents are using it or if they're not using it, just to know if you'll have it in the future.
Right. Thank you for sharing that. I think it's fair for parents to have that conversation with their child or their children before claiming their tax credit. But it's good to know that it's transferable.
Exactly.
Okay, so my next question to you would be, from your experience, what are the strategies that you think immigrants or Canadians generally can use to reduce their tax liabilities in Canada?
So I think it comes down to a couple things. So the first thing is it's hard to give one sort of strategy to everybody because, again, like you said, based on the category, based on your circumstances, what might make sense to one person might not make sense to the other, right? So if you're just, um, in your kind of starting in your immigrant journey, just an international student or a refugee at a low income stage, versus if you're, an immigrant with a very successful business or high income, high employment income, there's different strategies for you, right? So I think it comes down to your situation. And then from there, it really depends on what your goals are, right? So is your goal to, build as much wealth as possible so that you leave a big inheritance? Do you want to kind of maximize all your spending during your lifetime? These are you trying to, do you have kids? Are you trying to save for their education? So these sort of things really impact your tax planning. But in terms of just some of the more basic things that, generally recommended for the general population, I would say setting up TFSAs, setting up RSPs. These are really good investment accounts, I'll say registered accounts that help you kind of save and avoid taxes in different ways. If you have kids, setting up an RESP, and if you're looking to buy a home, or even if you're not, the First Home Savings Account (FHSA). These four accounts provide a lot of tax savings, and just maximizing these, you'll be better than 90% of Canadians in terms of your tax planning. Then the other 10% is when you get very specialized, where it's very specific. You can do things like if you're donating to a church or to your religious institution, making sure you get donation credits, because donation credits can, wipe away um, the cost of up to like 40% of your donation. So that cost of the donation is only like 60% of what you're actually donating. So it's a huge benefit. Um, you can, if you work from home, maximizing your home office to expense in different ways. If you have a disability, lots of people, especially immigrants, they don't really want to claim a disability tax credit, either because they might not know about it, or because they don't want their children to be labeled as disabled. But it really does provide a lot of benefits for the parents and for the children, if they do kind of apply for that disability tax credit. And so then you get to more specific things. For instance, if you're immigrating to Canada, um, you actually start to get taxed on your worldwide income. So this is very common for immigrants. Imagine uh, let's say you're a Yoruba man from Nigeria. Let's use yourself as an example, and you have assets in Nigeria. And then you come to Canada, and then 4 years later, you sell those assets in Nigeria. You actually have to pay tax on the appreciation from the time you immigrated to the time you sell. You have to pay tax in Canada. Now, you might not, you might also have to pay tax in Nigeria, but you also have to pay tax in Canada. So that surprises a lot of people. They have assets, back home in their country of origin, and they now have to pay tax in Canada on that asset that they sold in that region, which is crazy. And so there's different things you could do before you come to Canada, right? So there's gifting it, selling it. There's also something called an immigration trust, which is, it's a little more complicated. It might make sense for more, costly assets. Um, and a lot of people will get valuations done on their assets so that people know, hey, this is what it was valued at the time of immigration. And so any future appreciation will be from this value to when I sell it, not something less based on what CRA assesses the value to be. So
Oh wow, Mohammed, you've said a whole lot, and have learned way I've learned so much in the last 10, 15 minutes. And I love all the points that you raised, because of course I'm an immigrant, and talking about the disability tax credit, I can relate with that, because I know some friends in that situation that probably can be claiming some tax credit. But just like you mentioned, a lot of us are not comfortable with being labeled, or our child being labeled, and some don't even know, not that they are not comfortable with the labeling part, they're not even aware. And I love this worldwide tax that you talked about, because most people would have acquired a level of wealth or grown some assets before leaving their home country. And some people feel like, let me just come and still grow my wealth back home. And when I'm ready, I do what I need to do and make a lot of money. So it's important you mentioned that there are some things people can do before moving to Canada when it comes to assets and wealth, to manage their taxes whenever they need to maybe make some money back home. But I don't think we have the time to go into the details of those conversations. But I really love all those points you mentioned. I'm sure my audience too will appreciate it. So thank you, Mohammed. I still have some questions. I just want to mention that if you guys need more information, follow Mohammed on Twitter at Canadian Tax Guy. Right? Did I get that correct?
you did get it right. I know, and I
Right?
know my firm's called Tax Heroes. We are actually going to be changing the name relatively soon, but you can always find me on Twitter as Canadian Tax Guy or Canada Tax Guy.
Yeah. So Mohammed is a Canadian tax guy. He's been doing an amazing work on Twitter and he keeps sharing gems, some things that you will never know. You just drop the tweets or the thread and like, oh wow, okay. So thank you so much for what you are doing. Right. So my next question would be some there's been different argument about everybody thinks they must make money back when they file their taxes. Like when I'm filing my taxes, I need to get some money back. Some get some money, some don't get, some even have to pay back. And some people feel like, oh, my accountant is not doing a good job. How come you are getting $5,000? I'm paying back $300. Who is your accountant? Can I use your accountant so that I can get more money back? So can you speak to situations where people get money back from the government and people have to pay money back to the government?
Got it. So this is a very common thing I hear. People might want to use me because of, oh, my accountant didn't give me a big refund this year, this and that. And a lot of times, at the time of preparing your tax return, there's very little an accountant can do, right? There's not much that they can do when they're preparing your tax return. To really get tax savings, it has to be done, months in advance or years in advance, or in some cases, decades in advance. Tax planning doesn't happen when someone prepares a tax return, right? Um, and so the reason why there's differences between people is, back to kind of how taxes are calculated. You have income, expenses, tax rates, and tax credits, right? And if someone goes through all that calculation, but they might have paid a little more tax during the year, and they don't owe as much, right? Based on the amount that they pay, then they'll get a refund. Or vice versa, if based on that calculation they owe a lot of tax, but they didn't pay a lot during the year, then they'll have to pay taxes, right? So there's not much that the accountant can do. Not that they won't make any mistakes. Obviously, sometimes accountants do make mistakes, but it really goes down to your situation. And if you're truly trying to save tax, that's something you would do proactively rather than reactively at the time that you're saving taxes. So everyone has a certain amount of tax to pay. Um, when they file the tax return, taxes are paid during the year, either if you have a business through installments, or if you have a job, then you have checks that you have paychecks and they're deducting taxes from your paychecks. That gets compared to your taxes that you owe at the end of the year, and that's what generates the refund or the tax owing.
Wow, thank you for shedding light on that. Like, people need to understand that when it comes to taxes, you have to be proactive. So you don't just expect your accountant to do magic, every February, March, and you want to get some money back. So this is the best time to start preparing for 2024 taxes. So
Exactly.
what you do between now and the end of December will determine how much you pay back or whether you get money back from the government or from CRA rather.
I would even say the best time was in the past few years, but now that we're in 2024, this is the best time now, right? To help save you taxes in 2024.
Right. That's a very valid point. Thank you, Mohammed. I'm loving this conversation. I have like two more questions for you because I know I will have to bring you back to the podcast. So a lot of people feel like to save money in taxes or to get some freedom, you have to be a business owner in a country like Canada. However, how you structure your business can really determine the kind of freedom you get. So I know a lot of people currently work 9 to 5 and they want to start something on the side. Some just go to incorporate their business. Some start with sole proprietorship. Can you speak to the differences between sole proprietorship and being incorporated, and if there's any advantage that one has over the other?
Yep. So there's two main types. There are more types, but for an individual, there's just two main types of ways you can carry out your business. You can form your business. You can do it as a sole proprietorship, which just means you're doing it as yourself. Doesn't mean you don't have a company name. You could still have a company name and still be a sole proprietorship. Or you can set up an entity called a corporation, and anyone can do it. I know we all have these ideas that corporations are these big companies. No, anyone can start a corporation, and you can carry out your business through a corporation. So when does one make sense versus the other? So generally, like you kind of said, when you're at a lower income threshold, or lower income level, then it makes sense to have a sole proprietorship. And why does that? Why is that the case? That's the case because there are kind of a lot of accounting fees with setting up a corporation. You have to file a tax return each year. You have to prepare financial statements. You might have to do bookkeeping. And so there's a cost of having a corporation, higher accounting costs, and sometimes even legal costs with setting up a corporation than a sole proprietorship. And uh, it might not make sense for someone who's at a lower income level to set up that corporation, right? So when does it make sense to then, if you're a sole proprietorship, you can eventually incorporate. You don't have to just stay a sole proprietorship forever. You can eventually incorporate. And when does it make sense to incorporate? That's really when your income is a lot higher than your personal expenses. And so let me explain that a little bit. We all have personal expenses like, your home, your rent, vacations, groceries, things like that. Those are all personal expenses. And if you're making enough where your personal expenses are a lot less than your income, then it might make sense to incorporate. And why would it make sense to do that? Because corporations pay 12% tax on their income, and individuals can pay 20, 30, up to 54% tax on their income. And so uh, the more income that your corporation earns, the more tax you're deferring. But you can't just have your corporation pay for your personal expenses. You need to pay yourself from your corporation uh, to pay for your personal expenses. So if you can kind of pay yourself less and keep more in the corporation and then invest through the corporation instead of investing in your personal name, then there's a big benefit to incorporating.
Thank you, Mohammed. You've done justice to that question. And I have a follow-up question. So let's imagine I was very proactive and I incorporated my business, and I now realize that I'm not ready for this expense of incorporation, because you mentioned that you can convert your sole proprietorship to. Can you, is it like a downsizing? Can you convert corporation to sole proprietorship, or can you suspend? So let's say, for example, I incorporate a business, but from the look of things, it's not looking like that business will be active for the next 2 years. And I want to keep the name. Can I, but I don't want to pay all these expenses on taxes and accounting fees. Can I suspend business activity and still keep my name and not pay, then resume maybe after 2 years? I don't know if you understand my question.
I understand your question. That's actually a very good question. And that brings rise to another point, which is that incorporating is more of a permanent strategy rather than a temporary strategy. To go back from a corporation to a sole proprietorship, there's a lot of accounting fees and legal fees, actually, more importantly, to do that, because you kind of have to dissolve your business and then do it personally. And if you have a lot of earnings built up in the corporation, then you have to pay tax on all that equity built up in the corporation. And so it becomes a very costly procedure. And so most people will just keep their corporation alive if they want various things, right? If they have a lot of equity in the corporation, or if they want to continue using the name, uh, rather than kind of switching back and forth, because then it gets very costly, and there could be a lot of tax that you have to pay if you have a lot of like earnings built up in your corporation.
Wow, thank you. Thank you for sharing that. There's a lot to learn from you. And I think I'm going to come back maybe after 3 months when we have more questions. I don't want to keep going and keep going. But this will be my last question. I always love to ask my audience, like, what's the best piece of advice you've ever received in life?
Like tax advice or general life
No,
advice?
it can be generous. It can be.
Okay. Tax advice, I don't know. I'd have to think about that. But general advice, I would also have to think that. So nothing that comes to mind now. I think um, I'm pretty, I'm pretty, um, I'm a person of faith, and so I would think it would be faith related, but I can't think of a single piece of advice right now that's coming to mind. So, general, one thing I've been reading a lot, and I've been reading a lot of kind of financial planning and entrepreneurship type books. And one thing that kind of has been sticking with me lately is this idea of um, not enjoying this scarcity mindset rather than an abundance mindset, and not enjoying life now because we're too worried about the future. And I actually think this is something, a lot of immigrants deal with. They really limit how much they're spending and enjoying life now because they're worried about the future. They're worried about what's going to come. And so I think this idea of managing your different types of resources, your human resources, time resources, and human capital resources, and making sure that you're not overshooting or over saving and enjoying life in the present. So I don't think that's a piece of advice, but I think it's just an idea that's been sticking with me lately.
Yeah, it's a very great point that you raised, and I agree with you. I am also on that side of every day you wake up, live a good life. It's good to save for the future, but don't limit yourself or don't deny yourself of good things because you are scared about the future. There are a lot of things that will not even make sense to you by the time you turn 60. For example, if you want to travel the world, you need energy.
Exactly.
You need energy to climb mountains, to enjoy good things of life. So why do you want to keep saving? There's nothing wrong about saving. I don't want people to get me wrong. Save, but enjoy your life while saving. And I like that that's the piece of advice you are giving us. And that's the way to thrive. You have to thrive every day. You don't have to wait till the end of life before you thrive.
Exactly. I 100% agree with that.
Thank you so much, Mohammed. It's been a very great moment. It's been how many minutes have we done? About 40 minutes. And I've enjoyed every bit of this conversation. I want to say thank you for what you are doing, for educating people on Twitter, using technology to preach the gospel of finances. So,
Appreciate that. I really appreciate that. It means a lot when, when someone DMs me and says, "Oh, this is very helpful. This is great. Thank you." So it means a lot when you say that.
right. Thank you. On this note, I want to say thank you, everyone. And till I see you again, stay thriving and enjoy your life.
Perfect. Thanks.